in a world where there's an increasing number and increasing degree of volatility, the things driving change,
Yeah.
particularly in the markets we operate in, it's important to be able to react
Yeah.
in real time. We believe if you're writing property, you need to be certain you know what you're insuring. It's rough to have to tell someone their premium is going up 20% because of inflation. It's a lot rougher to tell somebody they don't have enough coverage to rebuild their house after it's burned down. Fundamentally, that's what we're in business to be here for, is those
Yeah.
moments. Hi, I'm Paul VanderMarck, Chief Technology and Innovation Officer at SageSure, and this is the future of insurance.
Paul, thank you for joining me today on the show. It's good to have you here.
Thank you for having me. Nice to see you again.
So, for those who don't know, can you give us a quick background on yourself and on SageSure?
I'm Chief Technology and Innovation Officer at SageSure. I've been in the industry, this is my fourth decade now. And at SageSure, we are a managing general underwriter focused on writing catastrophe-exposed property business, principally along the Gulf and East Coasts. We write business in 14 states from Texas up through the Northeast. We also have a growing book of business in California. And on January 1st, we closed the acquisition of Giovera, who are one of the top writers of personal lines earthquake insurance along the West Coast.
So it's an interesting background to then be sort of in a technology role. So you come from like the depths of the complexities of the risk that you take on with the RMS background. But tell me a little bit about your responsibilities today and what does that mean, especially in the context of a very tough moment from a cat exposed loss standpoint. I could see where your background would be really relevant to the work of the company right now. But what does that mean on a day-to-day for you? Like, what do you get into?
All right, so I spent 25 years previously at RMS in the catastrophe modeling business. I'd say all of us here at SageSure are fundamentally rooted in insurance. Our backgrounds are all very deep in underwriting and claims and risk. And our belief in how to build an enduring franchise in insurance is to be a great underwriter. And so
Yeah.
everything we do is deeply rooted in producing underwriting profit. And we're very, in the business we're in, writing property catastrophe, it's a very analytically driven business.
Yeah.
So as you said, I spent a lot of time previously coming at this from the perspective of how do you understand the risk, how do you smartly build portfolios of exposure, how do you manage that exposure, how do you match it with the right capital, and that's what we're focused on doing here every day.
You and I were talking before recording about kind of the moment a lot of carriers find themselves in and where the industry is. And I shouldn't call it a moment because it's not. It's sort of the way things are at this point around what I think some carriers would call uninsurability in some pockets of the country. And this is a global issue. So there's different geographies that are subject to it, or lines of business, or new versus renewal. And so you've seen a lot of pullback, very high rate taking, non-renewals, freezing of new business. That's not the SageSure story and really never has been. Can you why is that? What is it that the company is doing philosophically, strategically, practically that allows you to grow when others are saying, put on the brakes, we can't do this anymore? What makes this business viable for you? And having seen enough of SageSure, it's not that you're just a bunch of, cowboys going crazy, taking all the risks. You can it is, as you said, it's calculated. There's intelligence behind it. So can you share a little bit more about how? Because it seems so different from the general theme that we see at this moment.
For sure, the last several years have been the most challenging markets in all of our careers. You've had historic inflation coming out of COVID. You've had multiple back-to-back years of catastrophe activity, huge increases in reinsurance costs. And so, as you say, our markets have been challenged. Our producers have been dealing with carriers who've stopped writing new business, who've been non-renewing business, in some cases going out of business entirely. And we're fortunate against that backdrop that we've grown strongly. In fact, we've grown well ahead of plan over the last several years.
Yeah.
Because our producers needed product to sell. The shelves were pretty empty. For people buying homes, people who need insurance, our producers need something to provide them. And so we leaned into that market. And we're fortunate that we could be there to help them and provide them product to sell. We're fortunate that our reinsurers backed us in growing well ahead of plan. They know our track record of outperformance. They know how we run the business,
Yeah.
which, as you say, is highly disciplined and very analytically rigorous. And so it has been several years of significant growth for us. We wrote about $2 billion in premium last year
Wow.
and now insure almost 700,000 policyholders. And I think the roots of that are what I said before about the business has fundamentally been built around being great underwriters
Yeah.
and generating an underwriting profit, and that enables us to keep growing and have a sustainable, enduring business so we can be there for our producers and our policyholders.
See, I like the fact that you're sort of disproving that idea that you can't grow fast and be profitable. Progressive's another one who proves that actually you can grow quite a lot. I mean, the last time I looked at SageSure's numbers, I don't know, 4 or 5 years ago, maybe less, it was around 1 billion. So you've doubled in not a long time in insurance timelines, but done so while actually still being a disciplined underwriter. And that's, I think a lot of the sort of calling out the insurtech world is like, look how much capital they burn growing rapidly. It's impossible in insurance, but actually there are examples where you can be a great underwriter and grow substantially and be profitable.
Yes, our growth has all been disciplined. And in a way, we look at it and we looked at the last few years and said, this is the market we were built for.
Yeah.
We've done a lot of the fundamentals right in a way that sometimes isn't as recognizable in easier times.
Yeah.
And then when you have a hard market, that's where things really, that all that starts to shine.
Yeah.
And one way I think about it sometimes is that we have a contrarian view on a lot of things in the
Mm,
industry about how we do things. And so um, we believe, for example, that it's important to inspect every property we insure in an industry where most homeowners writers inspect maybe 20% of what they write. We believe in the importance of insuring customers fully to replacement cost and adjusting every year to keep them fully insured to value through whatever cycles of inflation the market goes through. We believe in the value of investing significantly in proprietary technology to run the business on. Um, we believe we can outperform on claims by eliminating leakage that's common in this industry,
yeah.
and so on. I could go on, but there are a number of elements like that that are fundamental to how we run the business and that positioned us to be in a very good place over the last several years.
Is there anything in the innovation side of your title that, especially given some of the challenges coming out of COVID, inflation, the cat activity, et cetera, and opportunities? Because of course, like as some carriers are pulling out, as you said, like agents don't have product. They need capacity. They need players who are willing to take risk. Are there things from an innovation standpoint that you've looked at that have allowed you to take advantage of some of that opportunity that's out there and serve the market where it wasn't able to be served?
Uh, yes, I I'd say we think about innovation as something that we're doing all the time across the entirety of the business, and a lot of it's about how we innovate the way we do work ourselves, not just finding external solutions to bring to bear.
Yeah.
And so what we do on inspections is a good example of that. Our belief in inspections is not just a matter of philosophy, knowing that actually seeing the properties we insure and inspecting them and assessing the replacement cost and ensuring we update policies where we need to. It's not just a matter of philosophy, it's also a matter of the ability to execute. So
Mm,
we inspected more than 300,000 properties last year. It takes a lot of work to be able to do that and take action on it operationally. And so we build a lot of proprietary software and data science models and other things that enable us to do that. So that's the heart of where we keep innovating every day in the business to enable us to execute on the things that we believe are important to be able to be great underwriters and generate great results.
Is it sending someone out to the property, or are you using tools for the insured or prospective insured to self-inspect with their phone or an app or something like that?
We still inspect every single property in person. We believe there's no substitute to doing that.
Yeah. So 300,000 on a 700,000 insured book that's a lot of activity. So it's definitely a big effort. But you're saying it's necessary given the markets you're in and the desire to have the right underwriting view on them.
Right. We believe if you're writing property, you need to be certain you know what you're insuring, that it's insured to value, that it's rated correctly, that it matches your underwriting guidelines, and so forth. And so while self-inspection apps have become a way that some insurers who don't physically inspect properties can start to do something that's better than
Mm.
nothing, it's not a replacement for actual in-person
Yeah.
physical inspection.
Paul, one of the things in particular that a lot of carriers struggle with is inflation. And I know like during COVID, lumber prices shot up. And for so many carriers, their annual product review and then the system changes, all of that just put them so far behind. So you're always playing catch up. Then it became, we're going to use rate to try to get there. The whole thing is broken. You're sort of always behind the curve and your business is eroding. That's not the approach that SageSure has taken to inflation, to systems, to any of that. Can you sort of give us some more color on how do you look at that question and then operationalize it?
Correct. So let me talk about inflation first, and then I
Yeah.
can talk about the more general question. This to me is a good example of what we mean when we talk about underwriting rigor. We do inspections of every property in part so we can measure the property, run an updated replacement cost estimate, and make sure at the point of new business that a policyholder is fully insured to the replacement cost for their property. Then every year on renewal, we update that replacement cost, and we update it fully for the amount of inflation we believe the data suggests has occurred and is occurring. We've actually trended forward in reconstruction costs or construction costs generally. And that's another contrarian perspective. In
Yeah.
the market, many carriers have used 2 or 3% average inflation guards. Some have been reluctant, even when they know that inflation is running well ahead of that, like historic 20% plus inflation a couple of years ago. Um, Reluctant to put that through because of concerns about the impact on customer retention.
Yeah.
Our view fundamentally is you're going to be upside down on rate if you're not applying rate, or upside down on premium if you're not applying rate to the full replacement cost of the property. And maybe most importantly, your customer won't be fully insured to value in the event of a catastrophic loss.
Yeah.
So we do a lot to ensure that our customers are fully insured to value and kept fully insured to value. And a big part of that is enabled by our technology. So every quarter, as we updated data on replacement costs and construction costs, that's going into policies in real time on renewal. And to your broader question, that's how the whole business works. And it's a big part of why we've invested in building proprietary software to run the whole business on. We have a team of more than 100 people building the software that we run SageSure on. They are not an IT team in the conventional sense of an insurance company IT organization. They're a professional software engineering organization. It looks like what I'd find if I drove down the road and knocked on some doors in Silicon Valley. We ship, I think a lot of insurance companies are used to waiting for their big systems vendor to
Yeah.
put out new releases once a year or once a quarter or maybe once a month. We ship new code into production about every 20 minutes, um, all year round. It's a real-time process to automatically test and deploy code every time an engineer finishes building something new. And that enables us to also put new insurance product updates into market in near real time.
Yeah.
So whether it's rating changes, underwriting guideline updates, new product launches, I was just looking at the statistics or metrics the other day for 2024. We had 2,850 insurance product updates we brought to market during the course of 2024. So that gives you a sense of the
Yeah.
velocity and frequency of with which we make updates to our product and market.
Yeah. I had a startup founder, an insurtech, insurer, and he said they can put in a system change every hour, and I was blown away. I mean, that is still really impressive, but yeah. So you got them beat every 20 minutes. That it's not about that like 19 is better than 20 or whatever. it's the fact that you'd need not wait until the next quarter or prioritizing it. So it's probably not the next quarter. It might be the quarter after that or the quarter after that if you're lucky. And for a lot of carriers, it's more like 12, 18, 24, 36 months, or waiting on someone else's priorities. As you say, maybe it's an outside provider that they have to prioritize, IT has to prioritize, maybe the actuarial team. So you've got all these uh, kind of longest pole problems, everyone holding each other up. That is, yeah, when inflation's moving as dramatically as we've all seen the past couple of years or a few years, um, you don't have that kind of time.
Right. In a world where there's an increasing number and increasing degree of volatility, the things driving change,
Yeah,
particularly in the markets we operate in, um, it's important to be able to react
yeah.
in real time.
I do want to call out the underlying philosophical point you made, though, that um, the whole issue is having an insured who is not properly insured. Yes, we need to base our pricing on what the actual exposure is, which I've been saying for a long time. But when we start getting worried, and maybe that'll scare them off, it's a lot better to lose that customer to someone who's going to fully insure them than to keep them sort of on a false promise where they thought they were covered and they weren't. And I'm sure they're not going to look back and be like, good thing I saved $150 because now we can't afford to live in our home anymore because it's gone. So yeah, tough.
Exactly.
Yeah, tough
Which is why I think it's
situation.
so important to always bring the conversation back to
Yeah,
that point.
yeah,
It's it's rough to have to tell someone their premium is going up 20% because of inflation.
yeah.
It's a lot rougher to tell somebody they don't have enough coverage to rebuild their house after it's burned down.
Right.
And fundamentally, that's what we're in business to be here for, is those
Yeah,
moments and to have a great product for the policyholder, and that requires that we help them be insured to value.
yeah. So I know your agent distributed. Do you see things on the distribution side that allow for dealing with the issues in the market and how hard it is to get coverage and some of the complexities and the risk? Have there been has there been a need to deliver tools and innovations to your agent partners so that they can keep up with kind of where, the complexities in the market that have developed?
For sure, we have teams of people who are entirely focused on the technology that we put in front of producers to quote and bind and service business with us. And so the activity or the state of the market over the last several years has driven us in new directions in some of that work, whether it's during periods of peak inflation, helping producers be better positioned to advise their policyholders
Mm,
or their end customers on replacement costs, inflation, why premiums are going up. That's been a real point of stress that um, premium increases of 20, 30, 40%.
yeah,
It's been a really challenging market for our producers over the last several years, dealing with that and dealing with just non-renewals from other carriers and so forth. So we've
yeah.
done a lot of work to enable our producers to service the end customer more effectively. We've also, a big area of investment for us has been bringing more products to market to give our producers more options, including options with other carriers who've got appetite that goes beyond our underwriting guidelines or areas in which we're at business in some cases, so that they've got more product to sell.
Mm. As you look forward, I called it a moment and then I said it's not really a moment, it's sort of the way things are. Looking ahead, what do you see as necessary for the industry to be able to keep up, to respond, to deal with some of the complexities that are here, or at least from SageSure's standpoint, where are you focusing your efforts going forward to keep that, the track record still in place?
We keep focusing every day on what the next things are we need to be doing to keep outperforming, to keep the flywheel spinning of the things that generate underwriting profit, that attract the capital to support the business and keep the end price of the product in the market as competitive as possible and provide value to the customer. Claims is a great example of a place we spend a lot of time and do a lot of investment and innovation. Um, there's um, there's a lot of leakage, unfortunately, in this industry of carriers paying more than they need to settle a claim. Um, you can take care of the end customer, make sure they get a great claim experience, their property's repaired to a high standard, and save money in the claim by not paying excess dollars in leakage to third parties who
Yeah.
are profiting off that claim. Roofing is a good example of that, to give you tangible example.
Yeah.
Um, you're asking about examples of innovation. There's a company called Roof Marketplace we work with closely. We actually believe strongly enough that we're an investor in the company. And they're a good example of how you can take an industry that's been around doing this for a long time and really change how you do things for the better. So they have an approach when we have a roof claim and we're buying a customer a new roof. Um, Instead of the traditional bottom-up estimating approach to coming up with an estimate of what a claim will cost, to have a top-down market-driven approach where roofers bid on the job. And it proves to be a much more effective way to get a market-clearing, fair price for a new roof than being subject to the gaming of the old bottom-up models that the industry is used to using.
Yeah.
And in fact, it's a good example. We had a claim recently in North Carolina, an older retired couple with the policyholders, and when they filed the claim, they already had a bid from a roofer for $35,000 to replace their roof. We put the claim through Roof Marketplace. We get 3 bids back. The roofers bid blind without the address of the property. They have all the details of the roof and the specifications they can bid. And it turned out one of the roofers who bid was the same roofing company whose salesperson submitted a $35,000 bid. That same company bidding from the desk bid $25,000
Wow.
to replace the same roof, actually with a higher quality shingle than the bid from the field.
Wow.
So you have a $10,000 difference between the bid from the commission incented salesperson in the field and the same roofing company, same team of people who installed the roof, better quality of shingle, better result for the customer. $10,000 difference is a great, tangible, recent example of the kind of leakage that is common in this industry, and that if you can find ways to eliminate, then you generate better results.
Yeah. Well, that's interesting, is that's sort of it's a market and network effect kind of solution that it takes both sides of that equation coming together and using the tool. And then you talked about some of the things internally that you're doing. Are there specific things that you're investing? No conversation's complete without mentioning AI. Are there things that you're investing in to enable SageSure's capabilities in particular moving forward, whether it's AI or something else?
Yes, we look actively at solutions various vendors are building, and we have a data science team internally who are building models of our own. One good example would be back to my point earlier about us having a contrarian view on various things. One place where we have a contrarian view in the world of claims is we believe in the value of proactive outreach to our customers after they've been potentially affected by a catastrophe event.
Yeah.
The conventional approach in this industry is wait for the phone to ring and be concerned if you were to reach out that you might create a claim.
Yep.
Our view is you likely have the claim regardless. The question is how long until it shows up, whether it's represented by a public adjuster or has gotten more expensive in the meantime.
Yeah.
Our view is we serve the customer better by reaching out proactively, seeing if they need help, deploying mitigation services, getting a claim filed if they need that done, and getting on with things. To enable that, an example of AI capabilities we've built an ability to take in aerial imagery that we commission flying right after an event.
Yeah.
And to automatically identify properties that have been damaged after a hurricane or other events like a wildfire, which then enables us to do proactive outreach. And so in many cases, we've had stories of contacting customers who've still been evacuated from a disaster zone and being able to share information with them that they didn't actually have yet about their own property.
I've definitely heard that argument that, to reach out to the entire panhandle or, whatever, some massive area of Florida, of Texas, of whatever, when a hurricane's coming through or has just come through, you're just going to generate all these claims that you have to deny because of the wind deductible. They're probably not covered, or a good chunk of them won't be. And I was sort of the mind, you say that, but then you also complain about how many claims come in represented, have a public adjuster, a plaintiff's attorney, what have you, and that you can't get ahead of it. It's like you can't do both of those things. But I like the solve here is you're not just blanket sending them to everyone. You're using technology to try to identify, at least narrowing down. Let's not send it to 100,000 people if 50,000 of them we can see had no activity. Could we at least sort of vet a bit ahead of time? which obviously then if the claim comes in, your adjusters have the aerial imagery already. Like you've already started that process and brought the intelligence into the handling before it's even been open.
Right. And it helps our teams prioritize who needs the most help or
Yeah.
likely is most in need of help. And I tell you, the feedback from our policyholders is terrific.
Yeah.
Most people don't expect to get a phone call or an email or a text from their insurance carrier immediately after a catastrophe event, especially with the kind of detailed information our teams are reaching out with. And so even when a policyholder hasn't had damage, the
Yeah.
reaction's been incredibly positive, and then particularly so when they need help.
Yeah.
And we just with the wildfires in Los Angeles a couple of months ago, we had just great recent examples of that, including there's policyholders who are being hounded by public adjusters telling them, look, trust me, your insurance company's not going to take good care of you. You need my help, and you should pay me some percentage of your claim to help you with that. And we had multiple policyholders say, look, I feel so great that you've got this. You've been reaching out to me. We
Yeah.
trust you, and I don't need to go hire a public adjuster. And
Yeah.
that's the dynamic we'd like to see after an event.
Yeah. If we want to change that tone in the interaction, there's a lot of marketing going on in the other direction that we're just here to, well, we're not here, right? We're not here for them. We're the enemy. And if we want to get on the other side of that, we have to reach out and act in a way that is helpful. So that's a great example of it.
Our NPS score is actually, for those familiar with NPS or Net Promoter Score, our NPS score among policyholders is actually higher among policyholders who had a claim with us than it is among the balance. So it's a testament, I think, to the great work our claims organization does,
Yeah.
but it also tells you something about, for most people, their impressions of insurance are of a product that they don't feel like they use actively.
Yeah.
When they actually do, in our case, at least the experience usually is a very positive one.
Yeah. In the early 2000s, I was responsible for customer satisfaction surveying at one of the major carriers. And we were looking at the JD Power results for the industry, and the most satisfied customers are the ones who had claims. The second most satisfied are the ones who had some kind of service need, billing, moved, whatever, changing their policy or including dealing with a problem on it. The carrier messed up and they had to call in, but it created this moment where the carrier could step up and delight them and be easy to work with. So even though there was a problem, I liked you better for it. And then the least satisfied were those who had no interaction whatsoever. There's no relationship. I'd be curious to see that today. That I think for a lot of carriers, those who had claims may not be in that top group, and we need to work to get back to that. So I'm not surprised to hear what your NPS breakdown looks like. And I think for the industry, maybe we've gotten away from that when we need that to be the strongest, because that's when you're proving the product.
For sure. And I think something else we reflect on a lot. Our mission as a company, we're very serious about it, is to pioneer ways to protect people's American dreams. And we were strong believers in transforming insurance to be a more engaged, proactive solution for our policyholders and for us to be thought of as a more top-of-mind active partner, helping them maintain their home and prevent future losses. And so I think a lot of when you think about a future where that's an increasingly active part of what it means for someone to have insurance with us, part of that is a more regular interaction. And to your point, you have a more positive experience when you're using the product in some form and it's present in your life as opposed to only when you file a claim or have a servicing issue.
Yeah. Well, Paul, it's great to sit down with you and reassuring that we can still compete in markets that are tough. We can reach out and be proactive and engage with our insureds, and we're better for it when we do. So I appreciate you sharing all the experience from SageSure with us today.
Thank you for having me on the show.